Hey, there we are. Hey, happy Thanksgiving. I'm Jack from Jack Gately Real Estate and the Online Real Estate Academy. This is the Thanksgiving edition of Real Estate News with Jack Gately. Thanks so much for joining us. I can't tell you how happy I have been to do this kind of experimental show, which has been an experiment for me at least over the last 7 weeks. And so many of your comments on the videos, and I've gotten many emails from you as well. And a couple of you have actually called me on the phone number that was on my real estate side that's in the background. So that it's been great. Really enjoyed that. Very thankful for you, for the audience. It's just been a lot of fun to do the show over the last 7 weeks. And as you can see, we have today the first ever broadcast from the home studio, which is we just kind of slapped this together over the last 3 or 4 days. And it's suitable. It will work for now. But I'm going to be experimenting because I think I have so much more to say about other topics. Experimenting with that over the holiday weekend, as much as my family allows me to do that, because we have a lot of things lined up. I hope that you do too. And we'll be back with our next show, of course, it will be next week, or our next video will be next week. So this is the last show of the week. This is the last show of the week. And I'm wishing you a wonderful Thanksgiving tomorrow, Thursday. Tomorrow, Thursday. Blustery here in beautiful Plymouth, Massachusetts right now. But tomorrow when we go to the football game here in Plymouth, we're going to the Plymouth North, Plymouth South game. Go South. We're looking at a beautiful Thanksgiving day here in Plymouth, 50 degrees and sunny. Let's talk about some things that are not real estate, and then we'll get into existing home sales. I love your comments, by the way. If you want to throw in a comment, I'd be highly likely to read it, as long as it's, this is a family show. But we'll cover a couple of not very important stories, and then we'll get into the beef of the show. By the way, Lions tomorrow, 12:30. So that should be perfect. High school football games at noon. We should be back by 12:30 for the kickoff. The Detroit Lions are now 8-2. They have not been 8-2 my entire life. So I'll be looking forward to watching the Lions. Brings back memories of watching Thanksgiving football with my Uncle Ed. And Lions are 8-2. Looking forward to that tomorrow afternoon. The Rolling Stones have announced a new tour. Yes, 16 dates, which I think is kind of like a cobbling together of some other tours, dates that got canceled previously. But yes, they'll be coming to Gillette here in Massachusetts, and also going to Arizona. So, I don't know. Maybe I'll be able to go to one of those dates. I'm sure I'll be there. I do have my Hackney Diamonds album right here. And if you haven't heard it yet, go listen to it. I'm very excited to catch the Stones. I've only been to one Stones concert about 4 or 5 years ago, and I'll be going again this year. I am glad that I got to see them with Charlie, but no Charlie this time, sadly. Other crazy news overnight, Sam Altman is now back with OpenAI. He's now back with OpenAI. And so apparently is Larry Summers. I know this is going to come as a complete shock to you, but there is more than one crooked cryptocurrency exchange. I know you're shocked by that. And I don't want to criticize cryptocurrency as a whole. There are crooks in every business, right? There's plenty of crooks in our business, as you know. There's a fair amount. They're everywhere, right? You have to be careful. But apparently there's more than one crypto exchange that's crooked. I am theoretically, from the big picture, a big fan of the idea of crypto, Bitcoin, because I think it has in its potential to get us out from under government-run money, which is commonly known as fiat money or paper money, because of course the government devalues that money on a regular basis, like every day. That's their stated policy, is how do we devalue the currency. So if there's any way that we can get out from underneath that, I think Bitcoin and cryptocurrency at writ large are our escape hatch. And that's why people that are so against it, like Elizabeth Warren, for instance, is because they understand that they would lose their control over the most important thing one of the most important things in our society, which is obviously our currency. All right, let's head over to existing home sales. CNBC, play it.
Existing home sales in October dropped 4.1% month to month to a seasonally adjusted annualized rate of 3.79 million units. That's according to the National Association of Realtors Sales.
Whoa, yesterday, remember we played you Mike Zuber's call? He was calling under 3.9 as he was floating down some boat on the Danube. And way to go, Mike Zuber. You got this right.
Down 14.6% year over year. That's a big miss. The street was looking for a smaller drop to 3.9 million. And this is the slowest sale.
Yeah. Now watch this. So under 3.8, just under 3.8. And listen to what she's going to say next.
Sales pace since August of 2010. That, if you may recall, was when the homebuyer tax credit expired. Now,
all right, so the lowest sale pace since 2010. Remember what a recession is. A recession is a slowdown of economic activity. It doesn't necessarily mean a slowdown in price, although that very often it goes with it. But if you're a real estate agent out there, you're feeling it because there's not as many transactions anymore. Are there? There are not as many transactions anymore. So there's a lot of real estate agents that are going to go do something else. And also, there's a natural reaction among regulatory authorities to make it more difficult to enter into the marketplace, right? Because they don't want the competition. They don't want to admit that, but that's exactly what it is all about. And if you can come through this, if you can come through a market like this to get out into the other side of it, whenever that happens to be, you will be a better agent for it and you'll be more successful. And once again, if you're waiting to kind of get involved in real estate from an agent point of view and you're like, no, I'm going to hold off until the market rebounds, you're an idiot, because you've got to put in the work now to build your brand, even when the market's not great, so that you can take advantage of the market when volume goes up again. All right, so continue on CNBC. Oh, what happened? I can't hear it. Hold on. Here we go. Hold on.
Going from right around 7% on the 30-year fix to over 8% in October, falling back this month, of course. Now, supply edged up 1.8% from September, but still down 5.7% from October of last year to just 1.15 million units. At the current sales pace, that's a 3.6-month supply, a little more than half of what is considered a balanced market between buyer and seller. Tight supply keeping pressure under prices. The median sale price in October, $391,800, up 3.4% year over year, and that is an all-time high for October. Realtors noted that multiple offers are still occurring, especially on starter and mid-priced homes, while price concessions are rising on the higher.
Multiple offers are always going to be happening in every market. You know, if you have a hot property, you're going to have, and it's priced right, you're going to have multiple offers. That's kind of like I heard that headline at Inman or whatever. The chief economist at NAR was like, multiple offers are still happening. The multiple offers happen in every market if you have a hot property. I've been to property auctions. Maybe you have too, when they actually auction the property off, like in the driveway. And there's multiple people bidding on the property. That's because it's in foreclosure. That's a multiple offer situation. So that was kind of a throwaway line from the chief economist at NAR, I think, to say, oh, there's still bidding. Of course, there's still bidding. We actually got outbid of a property yesterday. Oh, which reminds me, we're still missing that commission check from next week. I'm going to have to go to the office and grab that commission check. I want to bring you up the chart so that you can see these existing home sales. This is from wolfstreet.com. They do a really good job on charts. wolfstreet.com, to show you how existing home sales in the millions have cratered. Look at that. Like, oh my God. You can also see by this chart, like the up and the down since March of 2020, how much the pandemic has really distorted the whole market. Like, wow. I mean, that's like earthquake, like up and down on this existing home situation. And we are now at levels not seen since August of 2010. August of 2010, which was just before I got my real estate license. I got my real estate license in the spring of 2011. 2010 was, by the way, just to admit to you, probably my worst financial year ever. So wow, we're back to 2010 for volume of sales not seen since then. So just for kicks, I was like, what did the Massachusetts market look like back in August of 2010? Look at the difference. So the same volume of sales nationwide, same volume of sales as we had 13 years ago. And 13 years ago, we had 24,000 homes on the market in Massachusetts. This is according to MLS PIN. Today, we have 4,400 homes. 4,400 homes. Well, what is that? That's like a fifth? Is that a fifth? Someone do the math for me. I think that's less than a fifth. So let me just say that again. In 2010, we had 24,476 homes. And today, we have 4,385. Maybe someone can do the math for me there. Do the ratio on that. I'm pretty sure that's like 18%-ish. Somebody double check it for me. With an average days on market 13 years ago of 163 days, and now we're at 75 days on market in 2023. Two completely different markets, but with the same sales volume. Yeah, I remember houses would just sit there. Even when I got my license in 2011, 2012, 2013, 2014, you didn't have to rush to go put an offer in. If you saw the house on Tuesday afternoon, you had days to think about it. It was kind of weird. If you weren't licensed then you might get a kick out of this. But let's just say you saw the house Tuesday at noon and your clients were like, let's think about it. And there was no worry that someone else was going to come by and buy it out from under you. That was not going to happen. And so, your clients thought about it 3 or 4 days, and maybe you wrote up the offer Friday afternoon, and you gave them until like next Tuesday to answer you. because there was no urgency, because there were no other buyers. And yeah, you didn't have to rush. If you didn't see it Tuesday, you could see it Thursday. No big deal. There was nobody out there. The lawn signs were at the front of my neighborhood, for instance, at any given time in 2010, there had to be 7 or 8 houses for sale in my neighborhood. It was just crazy how many houses were for sale back in the day. We also look back at actual home sales. These are not seasonally adjusted. And you'll notice that our October number is actually lower than the prior year. Sales changes by region are fairly consistent, about down 15%, more or less overall. Great charts, by the way, willstreet.com. Much better than the ones you get at Realtor. Active listings, 37.6% of active listings in October blew by pre-pandemic highs on price reductions. So price reductions are on the way up. You can see that there. Supply is up to 3.6 months, which is the highest since June of 2020. But still, we're coming off the bottom there quite a bit, aren't we? Active listings jumped. Median days in the market rose. So when you hear all of those things, you start to think there could be a slowdown, which is something we talked about yesterday with the JP Morgan prediction that prices could go down in 2024 by 3%. But of course, as we've also warned, every market is local. Every market is local. Quick look at the markets here. Dow is futures are up. Oil is down to $75 a barrel. And the 10-year, I am looking to be wrong on the 10-year. At least for now. The 10-year is at, sorry about that. The 10-year is at 4.39. And what I've told you is that support, I think, will be at 434. 434 is support. If we break that, then I will be even wronger than I am now. But I don't know if I'll be, as they say at Zero Hedge, on a long enough time frame, I'll be right. Right? Eventually, I'll be right, because I think rates will go back to 8%. But what do I know? The 30-year fixed is now down to 7.33. And I'm happy to be wrong about this. But I do think that eventually in a couple of months, we'll be back to 8%. But I am happy to be wrong, at least for now. I will not be wrong over the long term. I know that. I just 100% convinced that rates are going to go back to 8%. But again, happy to be wrong, but I won't be. Mortgage demand jumps again. I guess this is also good news if you're out there buying and selling houses on behalf of clients. You want to see mortgage demand go up. It couldn't get much lower. So that's good news. Good news there. Let's see. Home sales. Yeah, we covered that. I want to talk about this one story that's not getting a lot of attraction, but it's very important. If you deal with FHA buyers, there is a effort out there to change the private mortgage insurance, the PMI, that FHA buyers have to pay. And as you know, PMI is for the life of the loan when you buy FHA. And there is an effort out there to waive that, to move it to be consistent with the conventional loan. So as a conventional loan, you can get rid of your PMI if you achieve the 20% equity mark. And that, by the way, there's a lot of variables depending upon the market that you're borrowing in. I actually only put 5% down to buy this house back in the day, and I've never paid PMI ever, and nor did I think that I paid a higher rate because of that. But I bought the house in 2002 when they were giving out loans like candy, and they were incredibly lax at the time. So I never paid PMI ever, even though I only put 5% down. And even when that happened, like, a lot of my friends thought I was crazy for putting that much down, because I had friends that were buying houses with no money down. I had friends that were buying houses and the bank was giving them money at the closing. So they thought I was nuts to put down 5%. That's just how generous they were with the lending at the time. But right now, if you buy FHA, and a lot of our clients at our agency buy FHA, they're looking to get rid of the PMI at the 20% mark, which would be consistent with the 30-year mortgage. So I'm kind of curious how you feel about that. I want to see that go away for my buyers and for my sellers too, because it would make FHA applications more attractive, or make FHA offers more attractive for sellers. But I also get really worried about there's a long track record. Let me put it this way. There's a long track record of the government easing off of affordable housing programs, and then a bunch of people pile into the program that wouldn't otherwise be eligible. And then we have this is the type of thing that feeds a housing crash. We've seen that decade after decade. There's pressure to make affordable housing programs even more affordable. And then there's a backlash on that, which can be incredibly ugly. And we've seen this. This is a long, long time story. Right now, they're saying they have $145 billion in reserves and could withstand a downturn the magnitude of the Great Recession, according to Housing and Urban Development. I mean, and that's hard to argue with. And you're like, okay, yeah, get rid of the PMI for the life of the loan and make it go away at 20%. I mean, when you see those types of numbers, but then you're like, $145 billion. I don't know. It's time after time we've seen an incredibly compelling case to ease affordable housing programs, only to be surprised of how that has broken the bank in the future because people got mortgages that shouldn't have had them and or couldn't pay it. You know the story. And then the prices go up. Yeah, it's a vicious cycle when you have the government like manipulate. What I'm trying to say is there's probably a really good financial reason why it's for the life of the loan. And even though I want it to go away for my clients, I'd be reluctant to see it go away on the big picture. I'd really want to see more proof in the pudding for that. Because, just because we've seen so many bad things happen with that over time. All right, let's see if we have any comment. No, we don't. That's going to be a wrap for today. Thank you so much for joining us. Happy Thanksgiving. You have a great holiday. We'll be back next Monday. See you soon. Bye-bye. Go make some money. You still have time. You still have time this week to make some money, right? Go do it. Have a great day. Bye-bye.